On August 15, 1971, President Richard Nixon made a monumental announcement that fundamentally reshaped the global financial landscape. He declared that the United States would no longer convert dollars to gold at a fixed price. This decision, often referred to as the Nixon shock, unilaterally ended the Bretton Woods system and severed the dollar's direct link to gold. The roots of this drastic move lay in years of escalating government expenditure. The Vietnam War was proving incredibly costly, and ambitious domestic programs, known as the Great Society Initiatives, further strained federal finances. The U.S. was effectively spending far more than its gold reserves could credibly back. Other nations, particularly France, began to notice this growing imbalance. They held vast amounts of U.S. dollars, which, under the Bretton Woods Agreement, were theoretically convertible into gold. As confidence in the dollar waned, these countries started demanding their gold, depleting America's reserves at an alarming rate. Nixon's decision was a direct response to this impending crisis. Rather than allow the U.S. gold supply to be completely drained, he chose to suspend the dollar's convertibility. This effectively meant the world could no longer exchange their dollars for American gold. With this action, the United States officially abandoned the gold standard, moving to a purely fiat currency system. A fiat currency is government-issued money that is not backed by a physical commodity like gold or silver. Its value is derived from public trust and government decree. The immediate consequence was that the U.S. government gained an unprecedented level of monetary flexibility. Without the constraint of gold reserves, it could theoretically print as much money as it deemed necessary. This effectively gave the government an open checkbook. This shift has profound implications for national debt. Today, the United States national debt stands at over $34 trillion, a figure that would have been unimaginable under a strict gold standard. The ability to create money without a tangible anchor has allowed for sustained deficit spending on a massive scale. While the 1971 event was significant, humanity's relationship with monetary standards has a long and complex history. The abandonment of a commodity-backed currency is not unique to modern times. Throughout history, civilizations have grappled with the challenges of maintaining stable monetary systems. Ancient Rome, for instance, gradually debased its coinage by reducing the precious metal content, leading to inflation and economic instability. Similarly, various empires and nations have, at different points, moved away from gold or silver standards, often driven by the costs of war or ambitious public projects. Each time, the consequences have been far-reaching, eventually leading to a re-evaluation of monetary policy. Today, as we navigate unprecedented levels of national debt and economic uncertainty, many are questioning the long-term viability of pure fiat systems. The conversation around alternative monetary anchors is gaining traction. Some economists and investors suggest that humanity may once again reset to a commodity-backed system, perhaps even returning to gold. However, the advent of digital technology introduces a new contender, cryptocurrency. Bitcoin, in particular, with its fixed supply and decentralized nature, is often touted as a potential digital gold. Whether the future holds a return to traditional gold, an embrace of digital assets like Bitcoin, or an entirely new paradigm, the lessons from 1971 and historical precedents remain crucial. Understanding these shifts is vital for navigating the evolving global financial landscape. If you found this exploration of monetary history and its future compelling, please like this video. Your support inspires us to create more content like this.